I haven't done anything in the last couple of days because the markets have been, well, I use the word treading water. When I spoke to one of my brokers this afternoon, he said teetering. I think teetering is a better description. Europe's open not so long ago. US is going to open soon. And Europe had a bit of a stab at the risk off, which I expect will follow through. This is what I'm seeing. This is the old area chart. We can see the big long term, the break, a gap here to be filled, which I think good chance to be filled right on the 23 Fibbo 4,000. Nice round even number. You see this move, it's been very technical, just the way in which it's kind of lined up, like the 50% retracement takes it exactly back to the high. These are right on the dings, right on the dongs, right? We go into like a 4-hourly. The 4-hourly, that's what I like trading off, really. You can see there's a bit of a toot going on here, which to me is a topping pattern and a few key levels down here. Obviously, this is in the futures, around about 4,200, then around 4,000. It's really is filling in this big gap here. It's spending a bit of time chunking around here, and that's where it's biding time. But you can see in the Europe, just the last few hours, it has sunk back to these lows, and it is having quite a stab down here around 4,300. Again, in the futures, there's not much of a gap between the futures and the cash market at the moment. Once again, that 44.80, that's a different game if it breaks there. This would be quite a test, have a lot of work for it to get through up there. Again, if it hits here, I expect it will. If it hits here, it'll be thin air. And you can see this area in here. There's not a total gap, right? But there is a bit of a void, I guess you'd say. In fact, there's a whole void like right in here, which we're seeing filled in here. That's the US market. It's looking pretty vulnerable. This selling that I've been talking about on the 17th and 18th, business days, the last few months, May, June, July, August, and of course in September, as I was saying a couple of weeks ago, when it did happen in September, which it would, it was going to take it below here. We are coming up to the 19th pretty soon. The 17th and the 18th pretty soon. Those sellers who've been out the last 5 months, they will have another go, I would say. By the way, just to reinforce, this is for education. This is technical analysis and market commentary, and I guess my trading diary. This is not financial advice. If you're trading like these markets with futures the way I am, you got rocks in your head. Go and speak to someone that's qualified before you do anything. People lose their houses. People lose a lot of money doing this kind of stuff. So take care. I'm not an advisor. I'm not giving you advice here. This is my views on the market. This is the Aussie market, being Australian. This is one of the things that I trade. You can see again, this was the move that happened this afternoon. Kiwi doubled their cash rate. Doesn't happen very often. Went from 25 to 50 points. That triggered a bit of a move, which is a bit weird, right? Because it was well and truly expected and very well telegraphed. But it certainly accelerated, and then as Europe opened, kicked on. I don't really think that trend line is that legit, to be honest. Some things get a bit forced. This is really a big level, and it is sitting on its haunches. You can see here, if it breaks this, I think tonight could be the night. There's thin air down here. Right, that is, it's had a few goes here in quick succession. Some quite determined stabs, and it is sitting there. There is some, you couldn't call it negative divergence, but that, I guess, one way to look at that is, the selling enthusiasm is waning, right, because the RSI is strengthening. Another way to look at it is to say that people are winding up to have another lash, right? If these lows had been lower over time, like that, then that would be a lot more bullish, right? Because really the sellers are pushing lower on weaker momentum. This is a little bit different. This is a bit more of a springboard, I think. But in any case, it's a bit of a do or die coming up, whether it goes back up to 7,300 or another 200 points up, or goes down like from 71 down to 68, 69. It's a key night for the Aussie. Let's have a quick look at the Nasdaq. I don't look at the Nasdaq that often, but in terms of the risk that's going on and actually going off, it tells a story. Now, I've seen a few guys that really have got no idea difference between like looking at these charts on a logarithmic and non-logarithmic basis. Some logarithmic or linear, it really is a function of time and price. If you're looking at something with big changes in price over a long period of time, you've got to look at a log scale, otherwise it's just like ludicrous, right? If it's a shorter time scale, it's less of an issue. But certainly something like the Nasdaq, where it's it's like triple. It's gone from 6.5 up to 15,000, right? That's to me that kind of kicks the boundary where you've got to look at it logarithmic, right? And I guess a simple explanation of it is say the reason why you've got to look at logarithmic is because like 100 points on 15,000 is nowhere near as potent as the same 100 points on 6,500. Logarithmic kind of like equalises it. That's the short version. So you can see here we've got another little gap in here. We feel it's similar to a lot of the other markets. A pullback to here is looking pretty compelling, but you've got like a few levels here that are being tested right now. And again, isn't sitting on its haunches now. This is a cash market, not the futures, but I would say it's going to be sitting on there this evening, around about 14,000. And again, if it breaks 14,000, there is some very clear air down there to fill. Same with all these equity markets. It's been a risk-off story, and it is testing some key support levels, looking very, very tenuous. So they're the equity markets. When I look at the Aussie, so I'm short the equity markets still. We'll look at the Aussie dollar. The Aussie dollar, again, same thing, like following the Kiwi move and a bit of Europe. It's followed that strengthening US dollar risk-off kind of scenario, and it's come back here. And it is sitting on this level, or it certainly touched this level around about 72.20. Which has been a key level that it's kind of bounced off. It had a bit of a support here. I thought it was going to be a turn and go, but it didn't. It came back. It is biding time, and you can see it in this big, chunk there. Really, like I'm still short the Aussie, and I guess waiting for a good impulsive move to the downside. That's what I think. You can make a case for it, coming to the point end of the season here, around that 72.50, which is remarkably similar to a lot of the markets, and including, gold is not that different the way it's chewing up the clock here. So here we go. You can make an argument for it, again, forming a bit of a diagonal here, a bit of a triangle. I'm not a big fan of that. To be honest, I do think that's a bit forced. Gold's a bit volatile, but you wipe out the noise, and you can see, if you go in a bit of a wider time frame, you can see what's going on here quite clearly, where it's coming down, it's looking to hit a level, and if it does something like to break down here, it is like, anywhere between like, $300 and $400, $400 at the max, really. If you kind of narrow this, take out some of the noise here, take it around about to there, you're looking like a bit under $300. But it will take it to somewhere around about that's like $300 there. It will take it somewhere, I expect, in this range here. And when you go back, you can see when you wipe out the area, makes it a lot more clear. You can see how that is a big support level around about that 1470. So I'm short gold. I'll be building a short more as if it bounces up here, looking for it to break down under 1700, 1720, 1725 key level. But that pattern there, obviously like a doppelganger for what happened back here. You could be looking at exactly the same thing. And this was a $320 breakdown, which you can see was like from the high there to the bottom of the range, $320, and that's where it finished its move. So if we do that again over here, we're looking from the high to, I guess if we say it is there, like 1700, make it 1720, that's the level that I've had in mind. That takes it down really quite far south. I guess it takes it down to this point here, which is where the big breakout started to happen. As I said, if you narrow it, you could say, right, it's going to be in there. But in any case, it'll be around, the target for me is like about a $300 move to the downside. The bonds have really been moving. I've been short the bonds, as in long the rates, short the bonds in the Aussie market. And you might have seen this before when I've talked about it. There is a long, let's get rid of the log scale for that. You get a long move all the way down for decades. And it really is same thing, pointy end of the season. Where it's come back to, I had an initial target of it coming back to here, and I thought it would pause, but it's come charging straight through, and it's come back really almost to the breakout point. It actually did touch the breakout point where it broke down from the highs back in February, March of this year. That is looking pretty aggressive to go north. I mean, the way in which it has gone up, sprung back, and kicked off again very aggressively. That makes sense, and it's kind of filled that gap, because really that was a massive gap that needed to be backfilled, and it has done that to a T. So now it's like it's done its homework and it is ready to go. I guess we could probably have a look at some, a bit of an extension here. That's basically a one-to-one kind of deal. This would be the target to me up in here where it broke down from. Up there, so that's around like the 250 mark, I guess I don't know if you can make that fit. That is forcing it a bit. Don't know how those extensions will pan out eventually, but I guess if you take it from the point where it broke out, which is kind of there. So if you take it, that's the point that it broke out at. That was the low, that was the high. I guess if you're kind of like looking at it trying to do your technicals as best you can, do it on the dings, on the dongs, all that kind of thing, then, well, he comes right on that point, right? So there's a few things that make me think that's a good point for it to go to. There's obviously this big gap here which has not been filled. This move that is the homework for it to do. So that 250 target, that's what I've got in mind. And another 100 points from here, let's face it, that's probably pretty reasonable given the way inflation is taking off. Lastly, oil. I have been looking at oil a little bit more. It's been on the move. I thought it was off earlier today. This is a long-term chart. You can see how that 78 level is very key, like over the long term. So it makes sense that it's a good time for it to have a bit of a pause there. it had looked like it was going to be off. Right? I mean, the price action really was pretty bullish, but it is having a bit of a pullback. You can see here, this is what it was when I was looking at it before. It was chewing off the clock down here. I went long here, right? Kind of because I saw it coming to a head. It chewed off a bit here, a bit of indecisive, and it had quite a move here. So I went along. It kind of went, and then when Europe opened, it came straight back down, and I pulled the pin out square, and it has come back since then. Not the night to go long oil, I think, but where it's come back to, that makes a lot of sense. It is looking, I guess, a bit precarious. Same thing with a lot of these charts where there's a bit of a gap longing to be filled in here. Look, so that's it for today. Going back to the US markets, once again, you can see they are sitting there right on their haunches around 4,300, and it is looking very precarious as far as where it could head. There are, I guess, if you kind of look at some, fib extensions where it could go to. It takes it down to that around about 4,000, 4,100 level. If we take it from where the breakdown really happened, I'll do it there. Yeah, I mean 4,200. That is a pretty good psychological level. Where I've drawn that line, that's based on the previous low there, but there was a lot of work done through here. That whole 4,200. It's like 4,230. Where I've got it, that whole level is quite key. Certainly here, that's quite a big target. As I said, with a lot of these other charts, there is just a massive void in the price action that we've seen this year that a lot of these markets have left behind, that to me is longing to be filled. Look, that's about it. I guess just the last thing is I want to emphasise this is something I do really for as much for my benefit as anyone else's. I find it quite helpful to talk about when I verbalise what I'm seeing in the markets. It does help me get it straight in my head. I'm certainly not looking for anyone to get into any chat rooms or rubbish like that. I've seen a few guys out there who want to con you into buying their courses, spend thousands of dollars on that, sign you up for like this, that, the other. I'm going to tell you more about one of these shysters, but when I used a dodgy email and signed up to one of his newsletters. It turned out to be the most outrageous hard sell I've kind of seen for ages in terms of trying to get money out of me. If this guy has such a great trading system, he should be like setting up his own hedge fund and would be worth $1 billion by now. But of course they're not, because it's all absolute garbage. And it culminated in the guy wanting to get money from people to trade it on their behalf. And when I questioned him and said, mate, what's your Australian Financial Services license number? All of a sudden, I didn't get any further spam emails. There we go. So be careful who you deal with on these things. I think there's some guys that are absolute full of it. The only guy that I've seen that I'd recommend is this guy who runs a channel, FX Empire. He's knows his stuff, I think, speaks like a trader. He's not trying to sell you anything. He's not a kid in his bedroom. Beware of these kids in these bedrooms that never tell you what positions they've got, that think they've got the best trading system ever, that never make any mistakes, and that want to sign you up to be their private clients and listen to them chat, online real time. These guys are full of shit. As I said, I hope you find these useful anyway. These are my thoughts on the market and the positions that I've got on, just for your education and as my trading diary. Okay, have a good one. Ciao.